How's it going, YouTube? I just wanted to do a weekly review on the week. I was actually able to pass my challenge this week. So I think that's amazing. Praise God for the opportunity. This week was very clean. So from Monday all the way to Friday, we pretty much had a one-directional push. As you see on the daily, our targets was rebalancing this day here, this daily fair value gap here, as well as the one down here. Those are the two areas, and now moving into next week, we want to see if we can at least get a wick into this area here. So it's kind of what we're looking on a daily. We definitely had a market structure shift on the higher time frame here with a raid on liquidity down here. So this was something you definitely want to see. You want to see that raid on sell side liquidity before price moves up, and that gives you more confidence that this leg here won't need to come down and take more liquidity. So what I'm thinking may happen, and I can't predict price, so we'll just have to see, is something of the sort of price at least coming down to around this area, then starting to give us that climb back up in the next couple of weeks or a week or two. So that's kind of what I'm seeing on a daily. We may not even come down to this area, but this may or may not happen. But we are targeting this buy side liquidity and following order flow. This would be our optimal target in this situation. Also, we can take into consideration we have, let's pull up our OTE. Which is around 62 to 79. We did break that 62 area. So this is also a optimal buying area. We're just waiting on more confirmation, reversal, signaling that we are done with the bearish market and we are now going to start climbing up. So that's what I see on a daily. Yeah, so that's what the daily looks like. Let's go down to the 4-hour. Actually, I was going to do a previous, I was going to do a previous week overview, but let's go for the forecast first. We do have these equal lows down here, so that is kind of appealing, appetizing. Which I would definitely want to see get rated as well, maybe on Tuesday or Wednesday, if price can slowly trickle down, wick, and then start to give us that liquidity rate on the sell side, and then start to climb back up as such, maybe giving us that 2022 model. It's kind of the ideal scenario, but that would mean that it would run through this daily fair value gap, maybe inverse it to give it more power. So we do have multiple imbalance areas that it can go up to throughout the week. Considering we had so much movement last week and this week, all next week may be a ranging type of deal, but we can never predict that, so it's fine. So we have a breaker structure to the downside. No real significant pullbacks on the 4 hour, but we take note that we are still marked buy side liquidity, also a weak high, and our sell side liquidity being a strong low. So we can actually delete that line now. So this is our, what you would say, dealing range. And as of right now, we are in a 4 hour fair value gap. So from here, we may actually continue down or get that reaction into one of these areas here for a quick rebalancing. This would be an ideal scenario. If they want to continue down, it'll be either, I would like to see it from here to continue moving down, or from here to continue moving down. It really all depends on how much the market needs to rebalance before it wants to continue down. So that's something to take into consideration. Let's just mark this so this is not confusing. That'll be our 4 hour, and then we drop down to I-15. And this is where we had our session on Friday. Pretty one-sided, bearish. We had multiple opportunities to enter at 6 p.m. right at the open. We got that major fair value gap, instantly tapping into that fair value gap, and then just running. It just started to run, and it never came back. It never came back, guys. So we started getting bearish order flow all throughout the night. Volatility entered to market at around New York Open. Right after New York Open, we started getting major pushes of volatility for at least an hour and 15 minutes. Then we enter into London 2 a.m., which is just a pullback into this wick here. It doesn't always tap into the fair value gaps, but this is when you go down into your lower time frame and you get your smaller entry. And then we get the pullback from 3 a.m. all the way until 8, and then our continuation expansion down. Again, here on the M15, we didn't get any significant pullbacks to trigger any trades. But there are some opportunities on the M5 and the M1 and the 30-second. So let's go to M5. This is when price gets a little more interesting. So we had the news come in. We had our market structure shift. We had the raid on liquidity. So these were the moves that could have been taken throughout the night. Or was it starting at 6 p.m.? Around here. Break a structure, fair value gap. 6 p.m. was actually here. So price came down, gave us the pullback. So on the M15, I believe it was, we had the pullback, which was the first entry here. And then we had a straight flush to the downside. Then we get our pullback phase, and we don't consider anything bearish until we get our market structure shift, which this one technically was a fake market structure shift, and we manipulated back up for buy side liquidity raid, and then again right at midnight open we consolidated, raided one more time on the lower time frame, then we got that break here, and then we started to run again. So back to New York open, same thing. We had our pullback from London, and as we enter the charts at 8 o'clock, 8 o'clock, we saw this get rated here. Right there. Let's mark that. That buy side gets rated. And then price just starts continuing down, giving us a market structure shift. And technically, this 8 a.m., not 100% sure if we had our entry signal here, or if it was here. But this was an opportunity. I wasn't at the charts at this time, so I can't tell you whether or not it triggered here or here. This would have been the best place, but if you know the model, it would be at the close here, at the close of the candle. This would have been your out the one entry. Stops above the high. This would have been ideal. Me personally, yeah, so it'd be stops above the high. I definitely use 50 ticks. As you guys see in my trading, it's 50 ticks. Sometimes I do target 300, which would be right there, or I target half that, which would be right there. It's either 1 to 6, or 1 to 3. Is this something that you guys would be doing? Is it recommended to place orders during news? No, not recommended at all. But it should be noted that opportunities are nevertheless presented, as well as the opportunity to just simply target your sell side liquidity right there. So that would have been a reasonable reason to get into the market. And during the end of the day, during the cool down period, or where momentum starts to slow down, we do get our second entry here, where we had this break, this wick. It didn't close just yet at that point, neither did it close in the pullback. So this would have been a potentially entry if you're super late on the day. Tight stop loss would have been super tight in my personal trading style. In this case, I would have definitely have targeted at least 150. I wouldn't have gone for the whole 300 move, considering we're already so low in the range, and these trades would technically be chasing price, as well as this entry here. We get another pullback into this fair value gap. Here, giving us another entry there, which could have been utilized for another 3R there. And eventually we hit our daily fair value gap. And if we zoom in super close, we can see the market structure shift And when you're in a area where you do expect rejection, you really want to use these areas as inverse fair value gaps, so I wouldn't have shorted that at all. So we get the market structure shift, and we have the fair value gap here. And then we get our last run to the upside. So even this would have been a good entry, even though we didn't get the entry signal. I guess it came too far into the, it came too far into the fair value gap. Maybe. But that was potential entries if you traded the M5. And let's go down to the 1 minute, which multiple opportunities were available all throughout the day. Multiple. And this is where things get kind of fun, because I like trading the 1 minute, especially when you know what you're doing. It's actually really fun. So here is the 1 minute. Like I said, this entry was the one for the 5 minute. Let's delete that. We still get the raid on the buy side liquidity there. And we get that market structure shift, and then we get that pullback into fair value gap here. So we do get that raid on buy side liquidity. We got that market structure shift. I don't normally draw my fib anymore. Yeah. So I don't normally draw my fib anymore, but it's good for confluence. You'll see it perfectly tapped in this fair value gap here, also giving us a signal entry. Signal entry was a little off. When you start to get too many gaps in price, like here and here, it's a little tough for it to read where it taps in to the fair value gap. But nevertheless, it's still generally super accurate in my opinion, especially when you're around key times of the day. Keep in mind this is 8 a.m. here. So this would have been a better entry which also makes your 50 tick stop loss a little more reasonable. Like I said, targeting 3R or targeting, potentially you can target your first standard deviation. Actually, for your scalp would have been that previous low. Actually, that's actually incorrect. So if you would want to target this area here, your stop loss, your fib would have to been there, which is not, there's no entry in alignment with that. So your best bet would have been here, or let's just say you took this entry here, price came back into this fair value gap, and at the close of the candle, actually I'm just trying to pick a more realistic spot that one would have entered, because it definitely wouldn't have been, I don't think that's realistic considering if you would have depended on the signal. If you would have placed a limit order, this is a realistic entry. If you did market execution, obviously we know those executions are a little more sloppy, so let's just go with there. Obviously you would have gotten some drawdown, but that's why we have risk management. So you could target your first standard deviation, you could target your just 1 to 3 RR first standard, and second standard, or 300 at 6 RR or standard, second standard deviation. So that would have been your first opportunity right at the open. Oh, actually, if you did that, you would have gotten stopped out on this. You would have gotten stopped out on that news. So it is best, best to wait for news to pass. Yeah. News would have done nothing good for anybody, in all honesty. But let's just say we started trading after news, and we're just looking for a continuation to the downside, targeting those daily fair value gaps that we saw. Actually, let's mark those out. It would have been this entire move here. Yeah, so would have been pretty big pretty big PD array to want to specifically target, but the mid-range of that PD array is here. At this point, we've already entered into the PD array and in the middle of the night, so this high here wouldn't have done anything interesting, except only the fact that we rated right there at the top of the PD array. So that is something pretty interesting to take note of. We rated all this liquidity here, 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 came right back above. So we could delete that. We do have this mid-range, 50% of that daily PD array. So back to here. If we traded right after the news, we would have looked for that first fair value gap right after break of structure. We don't want anything that's too far away from actual break of structure or market structure shift like these here. You do get signals like this or opportunities to continue to short, but these type of entries should not be your first entry. They should generally be areas where you add on. So your most high probable setups would be during a market structure shift, fair value or break of structure, fair value gap entry, or a market structure shift, fair value gap entry. And a plus setup would be a break of structure to the upside, market structure shift to the downside, fair value gap. And if I'm correct, those are considered breakers as well. When you have a market structure shift to the upside, break of structure to the downside, last order block that created that break to the upside becomes your breaker, which could be used to short after more compliments or rejection. This will all be in after just taking into consideration. Let's just say there wasn't a big old news candle here that invalidated all of this. This would have been a nice setup as well. So we come down here. Like I said, we had that first entry there. If you target your 1 to 50, get your 1 to 3 RR. That would have worked out pretty well. This here was tricking a lot of people. I saw a lot of YouTubers get tricked into going long here. I do believe I went long here as well. So I'm not going to say I didn't fall for it, because I did. But I did quickly change my bias right after. Again, here you get your market structure shift. So that, I believe, creates another breaker there. If I'm correct, also pulling back into a fair value gap, giving us a nice entry there for another $50 tick. and just grabbing your nice 1 to 3 RR. If you did want to hold anything longer, let's just say you just took out your take profit, you didn't even have one, you could have been able to add on there, and add on there. And eventually, if you're on the challenge, you would have to eventually just take your profit and be done for the day, due to consistency rules. And that's a problem you kind of want to have. You kind of want to make too much that you have to stop trading, instead of not make enough and feel forced to continue trading. So those were the entries for today. Like I said, there was a higher time frame market structure shift as well. Lower time frame market structure shift. Fair value gap entry here. If you do still draw your OTE, tapped in between the 60 and 79, got fair value gaps here. We did end up triggering a fair value gap entry here though, a little early. Here, that's where it entered and triggered. So if you would have taken this, you probably would have gotten stopped out. Yeah. Wouldn't have been the best entry. But here on the first market structure shift, right at the mid-range of this high time frame PD array, we do get that market structure shift, fair value gap. And a lot of the times I do trail my stop loss, so these trades would not have been, they would not have been full stop losses. They would have been break evens, especially this one here. This one, this honestly would have been a full stop out. Actually, yeah, so if I entered there, it would have been a straight stop out. And then, but I don't really trade I don't trade PM session. I'm not at the charts at that time. But yeah, that was a trading day. Go back to the 5-minute. Pretty much all week from Monday has been just amazing price action. Amazing price action. I don't know what the YouTubers are saying when they say trading conditions was bad. It was too much chop. This is not true. Right out here at 8 a.m. got that rate of the higher time frame swing structure. Oh, sorry, I can't see. Higher time frame swing structure here. We had the new week opening gap there, and all you need to do was come down and find yourself an entry somewhere in there, or find yourself an entry somewhere in here. So that was that day. Go over to Tuesday. What is this? Monday, Tuesday. Here's Tuesday. Very interesting day here. This was a little messy, to be honest. It really was. There is no denying the fact that all of this. You really had to be patient on this day. You really didn't get too many opportunities. Well, obviously there's plenty of opportunities. You just had to get in on the 1 minute. Here, a nice reversal. What did we raid? I'm sure there was a PD array here. Higher time frame PD array it tapped into, but we definitely liquidated the previous day low. Here. Then you would have dropped down. Got that inverse on top of the newly created fair value gap, giving yourself an opportunity to see that market structure shift fair value gap tap in on the lower time frame to see if you can target low resistant liquidity or just buy side liquidity. Wednesday was another interesting day. All this is hindsight though, as you can see throughout my actual executions. I don't think I take any of these trades. I don't even trade on the 5 minute, so these kind of trade ideas is for somebody who would prefer the 5 minute. But yeah, so what was it? At 8:30 we got that news spike up, correction, rating this low and this swing low. Then we got the market structure shift reversal here. I don't know if you guys can see that. Yeah, we got that here, market structure shift, fair value gap, entry here. It didn't trigger an actual signal, but it did here, targeting this buy side liquidity here. So that was pretty cool. Target that buy side, took that sell side, went for the buy side. Classic. Right at 10 a.m. here. Right at 10 a.m. the reversal started. So pretty interesting. Wednesday, we go over to Thursday. Thursday was very something that was very enjoyable to see. I've never seen price action do this before. Or if I did, I don't remember, but we just get clean right at 8:30. We get massive push down and then a reversal back up. This is Thursday, right? Yeah, so for me, I was attempting to go long, as you guys will see in my executions, attempted to go long. News came out. I have a very big issue of not looking at news or knowing what days news come in. So instantly got stopped out. Went for some scalps on shorts and then saw price run back up. Went 5 contracts long for a nice quick scalp, then closed and passed the challenge on Thursday. Then price continues to run down, rating the swing low that was created at the 2 a.m. right here. Price continues down and gives you 2 amazing opportunities to tap in for shorts here. So the New York Open and the True Day Open was in alignment here, and price really respected that area, which was very interesting. And then we go to Friday, which we went over. I hope this information was generally insightful. Like and subscribe, and hopefully I can so I may consider to start trading my Express account Monday, or open up a new challenge so I can at least have 2 Express accounts. We'll see Monday. Thank you guys, like and subscribe, and I'll see you in the next one.